I look at Bitcoin as a protocol for prosperity, and it's the first scientifically based, thermodynamically sound, physically sound, mathematically sound economic protocol in the history of the human race. Bitcoin is the emerging global capital network of the world. There is a digital energy network. It is spreading everywhere in the world at the rate of hundreds of millions of dollars a day. It's getting more powerful. It is backed by the greatest amount of computer power in the world. It's a network of millions and millions of computers, and everybody in the world can plug into that energy network, and they do it by buying Bitcoin, by handling Bitcoin, by building applications that use Bitcoin, by building their family on Bitcoin, by building their company on Bitcoin, by building their city on Bitcoin, by building their country on Bitcoin, right? I mean, there are a lot of ways to plug into the network. The network was $200 billion in power when I joined it. It's more than $2 trillion now. It'll be 20 trillion, then it will be 200 trillion, then it will be 400 trillion. It's going to grow for our lifetime. Smart money is going to find the network. People are going to sell their 20th century assets. They're going to sell their real estate. They're going to sell their equities. They're going to sell their collectibles. They're going to sell their currencies. They're going to sell their bonds. They're going to trade the past for the future. They're going to trade physical assets for digital assets. They're going to trade non-sound money for sound money. They're going to trade weaker assets for stronger assets. People think somehow, well, what if this stops? It's like they're like, well, what if Bitcoin stops going up? And I think what they miss is that's like saying, what if water stops flowing downhill? What if time stops going forward? What if things that you drop from mountains stop falling down? Right? It's like, what if gravity stops functioning? Well, it's not going to stop, right? If you understand the physics of the network, you understand that this is not random. This is because of thermodynamics, right? The reason the fire burns, the reason it's hot, it's not random. The reason electricity works, it's not random, right? The reason that water wheels work, not random, right? The reason that ice melts, not random. The reason you can boil water, not random. These aren't random things. These are just things you don't understand. And if you understand the physics of economics, then you can build a machine. You can build a hydroelectric power plant. You can build an airplane. You can build a ship. You can, Henry Ford looked at fire. Well, what if the fire goes out? It's not random, right? An internal combustion engine is when you actually start a fire in a machine and it never goes out, right? I start a fire in a jet engine and I fly across the Pacific Ocean for 15 hours by feeding kerosene into the jet engine. Well, what if the fire goes out? Well, if the fire goes out, you're going to crash and you're going to die. But the point is, it doesn't go out. Why? Because engineers engineered the machine so the fire doesn't go out. So my message to everybody is, you can engineer a better financial system. You can engineer a machine that's fueled by Bitcoin, right? We have a crypto reactor at MicroStrategy. Bitcoin is the fuel. This stuff is not random. If you think it's random, if you think it's a speculation, then you're not paying attention. You're like the guy that thinks that fires flicker and gods create them and they might just disappear if the god of fire goes away and gets angry at you. But Henry Ford didn't think that. Henry Ford created an entire industry and gave everybody a car, and there are 1 billion cars in the world today.
Yeah.
Right? And And so you have to look at the world as a physicist and a scientist and a mathematician. And once you see that and you start to think about why things happen, then you'll understand what's going on. There's a digital energy network. It is formed for the first time in human history. You can plug your machines into a digital energy network. That's the path to prosperity. Or you can run from it, or you can just complain about it, right? But if you want to engineer a better world, if you want to get rich, if you want to change the future of 10 billion people, you need to be an engineer. You can't just complain about electricity shocking you and fire burning you and run from, the superstitious thunderbolts of the gods. Bitcoin is the thing being monetized in the crypto ecosystem. Everything that attempts to be a digital commodity will probably go to zero against Bitcoin, should go to zero. And that's just because why would you want the second best thing? All you need is one thing. So you want the best thing. And Bitcoin is the best thing. If you look at other things, digital currencies like stable coins, there's a place for them. The regulatory environment is in flux. If the U.S. creates a regulatory environment for stable coins where if a U.S. company or U.S. bank can issue digital currency backed by U.S. dollar equivalents, then I think that industry will grow by a factor of 10 or 100. But it'll be, $10 trillion worth of digital currency, the dollar. By the way, what's the second best? The euro. What'll happen to that? That'll go to zero. Like, nobody wants any other currency. They don't want CNY. They're not going to want JPY. They're not going to want the euro. They're not going to want any African currency. They're not going to want any Asian currency. They're not going to want any South American currency. If you talk to Europeans, 99% of the demand in Europe for digital currency is for the digital dollar, not the digital euro. And the euro is clearly the second strongest currency in the world. So I mean, nobody in China wants the CNY. That's why there are laws preventing you from trading it. If people wanted it, you wouldn't have a law making it illegal to swap it for another currency. The same is true in Africa. Nobody wants any African currency. That's why there are laws making it illegal to swap them. So I think that if you go to meme coins, they're digital tokens. There isn't any regulatory framework for them. And so there's no path to legitimacy right now. But I think that if there's a digital assets framework created, right, if the United States creates a digital assets framework, then they define a token as a digital asset with an issuer with digital utility, but no physical utility. Like, if you define that, and if you define a digital security as an asset with an issuer backed by a security, and if you define a digital ABT, an asset-backed token, as an asset with an issuer backed by physical commodities or a physical asset, like an ounce of silver or a barrel of oil or a bar of gold, and if you define an NFT as a non-fungible asset with digital utility with an issuer, you can define all those. Then you can create a framework. You can define the data structures you need to disclose to the public. You could set the rules for that, and then you could issue millions of those assets in an ethically sound fashion. We just don't have that digital assets framework right now in the world. So I think that the only digital asset that has regulatory clarity right now is Bitcoin as a digital commodity with the use case of digital capital. If you're going to bet $1 billion or $10 billion or $100 billion, you need clarity. And so there's clarity in that regard.
Some people complain about one Bitcoin is too expensive now. So maybe only rich person or the institutions can buy Bitcoin.
It's just a cognitive error. It's cheaper than a house, and people buy houses, right? It's cheaper than a boat. People buy boats. It's cheaper than a nice piece of art. You can buy 1/100 millionth of a Bitcoin. You can buy a Satoshi for a fraction of a penny. You can buy $20 a Bitcoin, $200 a Bitcoin, $2,000 a Bitcoin, $200,000 a Bitcoin, $2 million a Bitcoin, $2 billion a Bitcoin, $20 billion a Bitcoin. Like it's actually much more egalitarian than buying real estate in Tokyo or Hong Kong or New York. You can't buy 100 millionth of a building.
Got it.
And so, in fact, Bitcoin is property. You can buy it in units of $1, $5, $10. So I think that that it's just wrong thinking. People are just ignorant, and they're making a cognitive error. And sometimes that's spread by people pitching them other tokens and other investment ideas. But if you're concerned about making money or getting rich, then you have to overcome those little cognitive biases. It's much smarter to buy $100 worth of Bitcoin, which is digital property, than it is to buy $100 stock, because $100 stock in a REIT would be a security. You have a much weaker property right. If you buy $100 of stock in a real estate development company, you're a limited partner, you're a junior partner, you have no title to the property. When you buy $100 of Bitcoin, you own the property. You can self-custody it, you can rent it, you can borrow against it, you can transfer it, right? So if you had a choice between investing in real estate or investing in Bitcoin, name me a building in what city do you live in, Colin?
I'm living in Hong Kong.
Yeah, name me a building in Hong Kong that you can buy $50 worth of.
Yeah.
Like, it's impossible, right? So Bitcoin is much better investment, much more egalitarian than buying real estate in Hong Kong. Plus, you can't, if you bought a building in Hong Kong, you can't move it out of Hong Kong. But you can buy a fraction of a Bitcoin every week for your entire life, and you can move the Bitcoin outside of Hong Kong, or you can take self-custody, which means it's outside of the Hong Kong banking system. And that's very strong property rights,
Yeah.
much stronger than any other property. So I think people should just buy Satoshis.